The Keltner Channels indicator, which is available for various platforms on the TradingFinder website. From this section, you can download the indicator file for MetaTrader 4 and MetaTrader 5 platforms and run it on your chart. Additionally, traders can read this page to learn about how the indicator works and its functionality. From the Navigator section, we select the indicator file, and by dragging the file onto the chart, we run the indicator. Once the indicator is activated on the chart, it starts displaying a price channel on the chart. Traders can effectively utilize the Keltner Channels indicator to thoroughly analyze both upward and downward trends within the market. This analysis is primarily based on the continuous movement of the channel itself. Furthermore, traders can strategically employ the upper and lower bands of this channel as crucial dynamic support or resistance levels, providing valuable insights for their trading decisions. If the price action definitively touches the lower Bollinger Band and clearly shows a distinct shadow, subsequently moving in a strong upward direction, we can confidently consider this particular occurrence as a very strong and reliable buy signal. Consequently, we should then proceed to set the upper Bollinger Band as our precise and ultimate target accordingly, anticipating a significant price movement towards that level. And if the price hits the upper band and gets rejected, use this as a sell signal and take advantage of this opportunity to execute sell trades down to the lower band. However, when the price breaks below the lower band, it indicates a sell signal, so we can enter a sell position accordingly. Similarly, when the price breaks above the upper band, it serves as a buy signal and we can enter a buy position. The middle line of the channel drawn here for us is based on moving average calculations, while the upper and lower bands are calculated based on the ATR period, which is set here as a multiple of the ATR. When the price breaks below the lower band or the lower ATR multiple, it indicates increased volatility in the market. And here we have an increase in downward volatility, as we can see the price has moved sharply downward. When the price breaks above the upper band, it indicates an increase in positive volatility or an upward trend, which we can use as a buy signal in the market. In the settings section, under inputs, we only have two options. In the first input, we can specify the calculation period for the moving average, which is set to 10 by default. And in the second input, we can set the ATR calculation multiplier here. One important point to pay attention to is the chart on which we run the indicator. For example, if I were to set the period to 50 here, it is crucial that the chart values and the specific calculation period I choose must be meticulously based upon the particular type of chart being utilized, the precise trading symbol involved, and the prevailing time frame. Therefore, the calculation periods that I ultimately set should always be firmly based on the correct and appropriate criteria. Here, I have set the moving average period to 50, and the market volatility has increased, so it does not provide us with suitable signals. Although we can enter buy or sell signals when the price exits the upper or lower bands, these signals have low reliability. To effectively solve this particular problem, if we were to significantly increase the calculation period of the moving average, for instance by a substantial factor, for example, I will multiply it by a factor of 5 and subsequently set its value to 50. In a similar and consistent manner, I will also proceed to change the multiplier value by precisely the same proportional amount as I previously changed the moving average, ensuring a harmonious adjustment. That means I either multiply this by 5 as well, or at least change half of it here. If I also increase the ATR multiplier by the same amount as I increase the moving average period by 5 times, you'll see that a wider channel is displayed for us, and if the price exits these bands, we can enter trading positions. Here, the price has moved downward and broken below the moving average, which indicates a downtrend. When it also breaks the lower ATR band, it signals increased market volatility in the direction of the downtrend. We can use the middle band or midline as a support and resistance zone, and even when the price hasn't broken above this level and there hasn't been a trend reversal within the channel, we can enter sell positions in the direction of the trend each time the price touches the moving average. Or when our channel is in an uptrend and the moving average is broken to the upside, we can enter buy positions each time the price touches it, or use the breakout of the upper band as a buy signal. Another effective way we can utilize this section is with a period of precisely 2.5, where we can incrementally increase the ATR by half the coefficient we previously added to the moving average. This will effectively draw a suitable band for us here, and we can confidently enter buy or sell trades based on the clear breakout of the band. Well, friends, we've reached the end of the tutorial for this indicator. We'd be happy if you share your comments and suggestions with us in the comments section.